Have you ever had that one mate who crashes on your couch, eats all your food, and just won't get the F out? Well, guess what? Inflation is kind of that guest in the economic world. And crypto's the one trying to leave the party, but keeps getting dragged back in by inflation, okay? We all hate inflation. If you're into risk assets like Bitcoin and cryptocurrencies more broadly, then inflation is your sworn enemy. Stick around for the next few minutes and we're going to learn how inflation works, how it's messing with your crypto portfolio, what's going on with inflation right now. Let's get into it. So, inflation is probably the most popular term in economics because it affects everybody. It measures just how much more expensive a set of particular goods and services has become over a certain period of time. Have you ever wondered why your $100 just doesn't really fill up the grocery cart anymore as much as it did 3 years ago? Heck, I remember back when I was a kid in the 90s, $100 was like a lot of money. Now it's like lunch. Because that $100, it still says the same amount on the paper, right? But the prices of everything have gone up. The Consumer Price Index, or CPI, is the most popular measure of inflation. Now, in the United States, the Bureau of Labor Statistics, or the BLS, releases this data every month. The BLS collects prices for a representative basket of different goods and services every single month, and then it compares the prices of that basket from month to month to see how much it's gone up in price. This measure covers all the essential stuff: food, beverages, housing, clothes, transport, all the stuff you need on a regular basis, and that's most likely to affect the average person. Inflation is a pretty big deal for the average person out there in the world because most people live on a relatively tight budget. And if they're making the same amount of money, but all their goods go up 5% every month, pretty soon they're out of money. Inflation is often referred to as the invisible tax or the theft of your purchasing power. So let's put this into a bit of perspective with an example. Take the price of a gallon of gasoline. In 2015, a gallon of gas cost $2.50. Today, the same gallon costs around $3.50. That's a 40% increase over a 10-year period. While a dollar might still be a dollar, its purchasing power has decreased, making it harder to buy the same amount of goods that you could buy before. And that's just one example. This trend extends right across to a wide variety of different commodities and everyday items. You've probably seen like the prices of orange juice, the price of eggs, all these sort of things have got a lot of attention because they've gone so crazy. Now let's discuss the latest numbers. We've got a bit of good news and a bit of not so good news. So the year-over-year CPI is 2.9%. That came in just the other day. So the price of goods increased by 2.9% compared to a year ago. Now this is generally in line with expectations with what most major analysts were expecting. The core CPI, which excludes the more volatile food and energy prices, rose by 3.2% over the last 12 months. Now this is actually good, by the way, because it's lower than the expected 3.3%. So it's coming in cooler than expected, meaning the trend's going in the right direction for the core items. But there is a tiny bit of bad news. However, before we get into that bad news, just a quick word from today's sponsor, which is iTrust. If you would like to have a tax-efficient way to do the cryptocurrency game, then you need to hear what iTrust has to offer you. You see, iTrust lets you wrap your crypto trading in a retirement account. So you can trade all the top coins, Sui, Solana, Dogecoin, by wrapping it in your 401k or 403b or whatever your tax retirement plan is called. You're never going to hit a taxable event. All the trades you want to make, no taxable events. iTrust is open 365, 24/7, and is the biggest IRA provider in the cryptocurrency game. They even let you do in-kind withdrawals so you can actually custody those coins in the future in your pockets, okay? They even do real gold and silver via the partnership with Kitco, allowing you to diversify out, which is pretty cool. Real stuff, guys. I like it. And if you want to learn more about what iTrust can do for you and what their services involve, you'll even get a $100 bonus when starting your account using the link down below. Thank you very much for supporting our sponsors. Okay, back to the inflation stuff. The bad news. The headline CPI actually increased by 0.4% in December compared to November, which was slightly higher than the expected 0.3%. Now, notably, energy prices were a significant driver of the monthly increase in the headline CPI, with a 2.6% rise in energy costs, accounting for over 40% of the overall index increase. But hey, you know what? Don's coming back, man. Don's going to come back and he's going to get the energy prices down, man. He's going to start drill, baby, drill. Let's go. Anyway, how does all this affect your cryptocurrency portfolio? That's probably what you really want to know. Well, let's discuss that, because guess what? This actually all boils down to how the Fed wants to play it. What's the Fed's reaction to the inflation news going to be? You see, the Federal Reserve operates under a dual mandate. One is to promote maximum employment. Right now, unemployment is near record lows. Good job, guys. And to maintain stable prices is the part number two. It's actually a bit of a tall order, and the Fed often doesn't get it right. They get a bad rap, but you know, the Fed. Anyway, whether the Fed's doing a great job or not is generally up for debate, and people tend to have pretty strong opinions either way. But going back to its mandate, when inflation rises, the Fed must consider how to adjust interest rates without throwing a monkey into the wrench of economic growth, okay? When inflation is too high, the Fed usually raises interest rates to cool down the economy, okay? Conversely, if inflation is too low, it may lower interest rates to stimulate economic activity. It's a delicate balancing act, and they're usually slow to act, okay? The Fed needs to tame inflation without causing a recession or significant job losses, which amazingly, so far it seems they've done. The soft landing may have really happened. So how does playing around with rates work? Well, reducing rates makes borrowing cheaper, okay? Providing more resources for business expansions and investments, for people to buy houses, all that kind of stuff, right? However, it must be done carefully because it's a double-edged sword. You see, you stimulate the economy too much and you risk high inflation coming back, okay? Too little, you cause an economic crash. I don't envy Jerome Powell's job at all. As the Fed decides which step to take, its decision directly affects risk assets. Things like crypto are very responsive to what the Fed is doing. When interest rates are low and liquidity is high, investors may seek higher returns from riskier assets like Bitcoin and dog coins and all the other cryptocurrency coins, okay? On the flip side, when the Fed tightens its monetary policy by raising rates, this can actually lead to decreased investment due to higher borrowing costs. Now, it's not always perfect. We've seen markets rally with high interest rates, obviously. But going back to the numbers, the CPI reading is relatively promising. But the question is whether that is enough to give the Fed a reason to actually slash interest rates even more. And this is why we've seen turbulence in the markets recently, because people are afraid the economy's too strong. Therefore, and inflation's coming back, therefore, the Fed's not going to cut as much as we want them to. And it is true that inflation was in line with expectations, but 2.9% is still pretty far from the 2% target. The number is actually closer to 3% than the ideal 2%, obviously. We also have to remember that the increase in December was 0.4%, which was higher than the expected 0.3%. And although core CPI is down, inflation remains a big concern. And I know the number is small, but it could mean that inflation is accelerating. It's going in the wrong direction. Let's just put it that way. Core CPI and PPI, now PPI is the price that producers pay, both did come down. So there's a potential there that could indicate inflation could actually be cooling off and that the doomers are wrong, okay? Now looking ahead, the future remains uncertain. What exactly is going to happen with inflation? There's so many moving pieces, it's impossible to predict. Inflation will, though, remain a key driver of market sentiment in 2025. The Fed has projected as much that you should be paying attention to inflation. Cooler inflation equals prices go up. Higher inflation, price dumps, because we're not going to have any rate cuts. And yes, Fed officials are already concerned about inflationary impacts of Trump policies, although tariff inflation fears, like most things, probably getting pretty overblown. But in the December meeting by the Fed sat down and they discussed the possibility of slowing down rate cuts due to inflation fears. They see inflation going back up. It'll be not a problem by the end of the year, they say, but they see inflation going back up, literally went up this month, okay? And therefore, they're worried they may not be able to cut rates as much as they'd hoped to. So they're considering only 2 rate cuts now for 2025 instead of the previously estimated 4 to up to 7. The Fed has made it clear that with no recession in sight and the jobs market being good, unemployment is low. The primary focus is inflation, inflation, inflation. Now, am I worried? In the short term, not really. Because the elephant in the room is that the new administration is very pro-crypto and also pro-business. They want a weaker dollar. There's going to be liquidity coming into the markets, and energy prices are probably going to go down. Trump's victory last November already pushed Bitcoin above 100K. Heck, the market's actually pumping at the time of me recording this video. Just imagine what's going to happen once he actually gets into office and is able to implement those energy policies and things like this. We could see inflation coming down quite a bit, which would then give the Fed the ability to cut rates even more. We also have Trump promising a strategic Bitcoin reserve, so crypto specifically totally set for outperformance in 2025. Altcoins also could benefit from Trump's rumored plans to eliminate capital gains tax on cryptocurrencies issued by U.S. registered companies, so XRP, Stellar Lumens, HBAR, stuff like this. Plus, we have altcoin ETFs for stuff like Solana and XRP that are going to be coming under a new SEC. All in line with Trump's promise to make the USA the crypto capital of the world. So, as long as inflation doesn't absolutely explode and soar way, way higher, probably not that big of a concern. And look, inflation's, of course, always an unwelcome guest, nibbling away at our portfolios, gnawing on the brains of all the doomers. But with a new president in town, there's hope that crypto might turn the tables on inflation, and that inflation might not even end up being that big of a deal. I know the tariffs conversation can be a bit scary for some people, but then you have the energy equation, which is probably going to bring inflation down, giving the Fed room to cut more rates, and the golden bull market can continue. Thanks for watching.